GWSCPE model. So right here, I want to show you how we protect our capital when we have taken an entry from a key level and then we see that the market is not moving our entry projection yet. What we do is what I'm showing you right now. So look at what is happening here. Our first entry was taken from the lower level here, which of course we expected the market to sell. So we took the entry all the way up to our last trend entry at 3064. That's 0.64 here. So now when we took the entry, we knew that we did not want to go above our maximum loss size. So we now had to repeat starting from 0.01 when we saw the move going all the way to 20 or 40 pips spread from our main entry level. So we started again from 0.01, 0.02, all the way up now to 0.16. So now we are seeing the market move so far, okay, away from our entry projection, and we are not worried because we have protected our capital. You can see the capital here is 67 negative that we are holding. All right, why we have taken all of these entries. As far as this market continues to deviate from our entry projection, we just have protected already. So we have already locked our capital. This is what it looks like. Why the market is deviating, okay? Because we did not have the capacity to take a sort of higher entry based on we don't want to risk more than our margin for the entry. So if we want to trade again at the higher level, we're going to start from 0.01 again. So let's do that 0.01. We see how it goes again. So right now we are projecting a rejection as it is right here. A rejection of this is a correction impulse, okay, projection arrow. So let's project a rejection by starting with 0.01. So you can see we've started again 0.01, and now you see the price has started moving again because we have repeated, okay. So it is only from such a point that we can begin to see activity. Once we lock our capital, is locked, okay. That is called capital protection with the GWSCPE model. Okay, so now we are repeating the same structure we did from below down there, and then we are only going to do this number of times as the market keep deviating from our entry level. Now, why is this very advantageous for us? When the market starts going back into trend, the market is going to move all the levels we have traded already and take them down, okay, to our projection. Now, our projection is for price to come down to 3180, okay, all the way to 3172. And right now, that is based on the BPO structure that formed here. This is the BPO structure that formed, and the market is here to make the move. So we had projected all of this. We saw when there was a rejection here. Several times there was a rejection here, and we were projecting that this is going to happen. And we saw it happened. Then now the market formed a UF setup. This is the circle limit of the UF setup for buy, and the market completed that move to the UF setup, okay. Then after reaching the circle limit, it came back down, formed what we see here as a minor trend low. Okay, so this minor trend low is responsible for moving price to the correction of the major trend impulse. You notice that is a rule for correction. So this is a major correction happening. I want to see the correction reach the end point before the market begins coming down. So as the market is doing this correction, it already created for us a new IPO here. It just bypassed the first IPO that was supposed to bring us back down into trend, and that was what brought us into this next formation of a minor trend impulse. So we know that when we have a minor trend impulse form like this, when the impulse low is broken, when the market returns back, the market has 300 pips projection. So we've already done a projection down, okay, 300 pips when the market will be coming back down. Then also we are using our BPO structure here to know that the market will still go back down, okay, 580 pips. Yes. All right, so that's what we'll be doing. We'll come back to this in our next lesson.